So, my dear students, in the second year syllabus, from the accounting part, the syllabus is, the first chapter is depreciation and the second chapter is accounts from incomplete records, or we can say it as a single entry system. And the third chapter is consignment accounts, and the fourth one is accounts from non-trading concerns, and the fifth one is partnership accounts, and it was divided into two parts. One is admission of a partner and the second one is retirement of a partner. So as far as our syllabus is concerned, from the depreciation, you will get a 5 marks problem, and from the single entry system, you will get a 5 marks problem. So we shall start from the first chapter, that is depreciation. In your first year syllabus, you might have come across the word depreciation under the final accounts chapter. In the final accounts chapter, under the adjustments, we use it to calculate a 5% depreciation on furniture, a 10% depreciation on buildings, and 5% depreciation on machinery, and like this, the adjustments were come over in your final accounts chapter as far as your first year syllabus concerned. At that time, the word depreciation, the lecturer may give you the meaning of the word depreciation in a nutshell, but not in an elaborate sense, because at that moment you must know how to calculate the depreciation amount. That's enough for the student. For that reason, they never explain about the word depreciation. Simply they will give the meaning in a nutshell, in a capsule form, and they will go for the adjustments. So at that moment, the word depreciation you have come across. As far as the second year syllabus is concerned, and from the depreciation chapter, you will definitely get a 5 marks problem and a 2 marks bit from the depreciation chapter. For that reason, we have to explain it very elaborately and very extensively. And we are going to the actual topic of the depreciation. Actually, in your first year syllabus, in the first year syllabus, we have come across the word depreciation. But the meaning of the word depreciation, the depreciation was calculated in your first year syllabus only on the fixed assets, because the fixed assets will have certainly a depreciation, the nature of depreciation, and the variable assets also causes depreciation, but it will be discussed later on. So fixed assets of a business concern like buildings, machinery, furniture, etc. are required in business. These assets lose their value on account of wear and tear or due to lapse of time. This loss or decrease in value of fixed assets is called depreciation. Once again I am repeating. Fixed assets of a business concern like buildings, machinery, furniture, etc. are required in business. These assets lose their value on account of wear and tear or due to lapse of time. This loss or decrease in the value of fixed assets is called depreciation. This is the meaning of the word depreciation. But the word depreciation was derived from a Latin word. The word depreciation was derived from a Latin word deprecium. Here, D means decline or decrease. Pretium means price or value. That means the decrease in the value of, or the decrease in the value of the asset, or the reduction in the value of the asset, it can be considered or can be called as depreciation. So the word depreciation was derived from a Latin word deprecium. D means decline or decrease. Pretium means price or value of the asset. So the decrease in the value of the asset or the decrease in the price of the asset is considered as depreciation. And the depreciation, the depreciation depends upon some the definitional part of the depreciation can be considered or can be the depreciation is nothing but it is a reduction on the book value of an asset due to wear and tear. It is reduction on the book value of an asset due to wear and tear. Book value means the cost price of the asset. The cost price may lose its value by using continuously or by using it very oftenly. So for that reason, the asset may lose or the asset value may be decreased. And this is called as depreciation. And there are so many definitions for depreciation. Depreciation is the gradual and permanent decrease in the value of an asset from any cause. Depreciation is the gradual and permanent decrease in the value of an asset from any cause. Or it can be, in simple words, depreciation may be defined as a continuous and gradual and permanent decrease in the book value of a fixed asset is called as depreciation. Or it can be explained in simple words. In simple words, depreciation may be defined as a permanent, continuous and gradual decrease in the book value of fixed asset. For this, we can quote an example. We can quote an example. Suppose a student had purchased a pen which cost 10 rupees and it was used for a day. Can anybody sell that one once again for 10 rupees? It's not possible, because every purchaser may say that it was used one. Already it was used one. So they can't purchase that one for 10 rupees. So the value will be decreased only because of usage. Like that, there are so many causes and so many causes of depreciation. But before that, why the depreciation should be shown in our accounts? Why it had given a significant place in the bookkeeping part or in the accounting part? Need for providing depreciation is the next one. The first and foremost are the important point to show depreciation in our accounts is to reveal correct profit or loss. If the depreciation was not shown in our accounts, then it's not possible to arrive or to derive or to reach the correct profit or loss. The main aim of providing depreciation is to ascertain the correct profit, because suppose in your first year syllabus you have shown the depreciation amount on the debit side of your profit and loss account. In any asset you have calculated 5% depreciation. The depreciation will be shown on debit side as 1,000 rupees. And on the credit side, the gross profit brought forward will be 10,000. Then the net profit will be 9,000 rupees. If the depreciation was shown in your accounts, the net profit will be 9,000 rupees. If you have not provided place or if you have not provided any amount for depreciation in your profit and loss account or in your accounts, then the net profit will be remained as 10,000 rupees. This is the main reason to show that depreciation in your accounts, to ascertain or to reveal correct profit or loss. It's necessary for anyone to show the depreciation amount in our accounts. The second point is to show correct financial position. The same example can be taken into consideration. If the value of the machinery is 10,000 rupees, in that year, you have shown 1,000 rupees as depreciation. Then the net value of the assets will be 9,000 at the end, year ending only. At the year ending. The net value of the asset will be only 9,000 rupees. If you have not shown that 1,000 rupees as depreciation in your accounts, then the net value of the asset will not be shown as 9,000 rupees. The value of the asset will be remained as 10,000 rupees. And then there will be fluctuations in profit or loss. So to maintain or to show correct financial position, the depreciation should be shown in your accounts. Balance sheet is a statement of assets and liabilities. It gives correct financial position of the business. It gives correct financial position of the business. In balance sheet, assets may be shown at their true values. This is not possible unless the depreciation is deducted from the value of these assets. For that reason, we have to maintain the actual financial position, or to know about the actual financial status, or to know about the real financial position. The depreciation should be shown in our accounts, because it will be reflected in the balance sheet on the asset side by deducting from the depreciation amount from the concerned asset. It's a must for everyone to show the depreciation amount in the accounts. And the third point is to make provision for replacement of asset. So, for example, you have purchased an asset for 10,000 rupees. And the working life of the asset or the estimated life of the asset may be 5 years. So if you have make a provision of 2,000 rupees every year as depreciation on that asset, after the completion of its life, at the end of its life period, or at the completion of its life period, the asset, you can have a provision of 10,000 rupees as depreciation in your books. And with that 10,000 rupees, you can replace that asset with a new asset. So for that, everyone, every businessman should make provision for replacement of his assets. So the depreciation is needed. The depreciation is a must. So with the above three reasons, we can understand where is the need of depreciation to show in our accounts, or what are the necessity, or how much necessity the depreciation should be shown in our accounts. So with those 3 points, one can understand the need of depreciation to show in our accounts. So before that, once again, we can make use of an example for the to know about the depreciation. Suppose the students are very much fascinated in purchasing a motor vehicle or a two-wheeler. Suppose they have selected a bike from a showroom which costs 70,000 rupees. And after the fulfilling all the government formalities, it may cost 80,000 rupees to get it on the road. Suppose the person or the person who had purchased that bike for 80,000 rupees used for a month, and after 1 month he wants to dispose that one, or he wants to sell that one in the market. Then before that he made a thought that it should be a new one, or it should be a brand new one. Then he spent 1,000 rupees for its repairs, or to show it, to make it as a new one. And then he wants to sell that vehicle for 81,000 rupees. Nobody will purchase that one for 80,000 rupees, because everyone should say that it was already used for 1 month. So whatever it may be, whatever the makeup was made by the purchaser, It can't be sold out for the cost, for the value which it was purchased. For that, we can, in simple words, the depreciation can be explained as a permanent, gradual decrease in the value of the asset. There will be a gradual decrease in the value of asset, and which is a permanent one. It can't be replaced by making any shop or by making any other things. It can't attain its value, or it can't attain its actual value after some usage, after some passage of time. This is the meaning of the word depreciation in a nutshell. And the reasons to be shown the depreciation amount in your accounts was already explained as need of depreciation or as the necessity of depreciation. After that, for all the fixed assets, all the fixed assets causes depreciation, or they may face depreciation. And what are the reasons of depreciation, or what are the causes for depreciation? And it can be explained in so many subheads. The causes for depreciation are, the first one is wear and tear. Wear and tear means by constant usage or by continuous usage, it was the asset may be get depreciated. The best example for that one is cycle tires and tubes. Nowadays, almost all are using the tubes which are not of making any repair. But by constant usage, by continuous usage, the asset may be depreciated. The best example for that one is cycle tires and tubes. And the second cause for depreciation is afflection of time. Afflection of time. Certain assets get decreased in their value with the passage of time. The best example for that one is leasehold properties. Leasehold properties are leasehold properties are because the peasants or the farmers will get a land from the landlord for lease, and they will cultivate that one. After the passage of lease time, or after the afflection of the lease time, the land or the entire ownership will be with the owner itself, but not with the leaseholder. That is the second reason, or that is the second cause for depreciation. Afflection of time. The best example for afflection of time is leasehold properties. And the third reason for causing depreciation is depletion or exhaustion. Depletion or exhaustion. An asset may be exhausted. An asset may be exhausted through working. An asset may be exhausted through working. For example, mines, oil wells, quarries, etc. On account of continuous extraction, a stage comes when the mine or oil wells completely exhausted and nothing left. That is, if a mine is there, a quarry is there, or if a mine is there, you are extracting the raw material from that mine. It may give the scope for 1 year or 2 years to get it extracted. After the completion of the 2 years, the mine may be exhausted, and you can't find any raw material in that mine. So with the passage of time, or with the extraction of the raw material from that, it will be exhausted. Nothing will be left in that mine. This is the third reason, and depletion or exhaustion. And the next one is obsolescence. Obsolescence means In literary meaning, the literary meaning for obsolescence is outdated or out of fashion. It means out of date or outdated or out of fashion. The best example for obsolescence. Now, in the past, in the olden days, almost all the public or almost all the people are used to have a radio as a prestige symbol, as a prestige symbol. They have used the radio. And if anyone purchased and he will make volume to the maximum extent to get disturbed the other neighbors also. But nowadays, what is the position of the radio? We never find a radio in any house. And after that, the radio with the change in fashion of the customer, or if the taste of the change in the taste of the customer, the radio was completely obsoleted, or the radio was completely outdated, or the radio had become out of fashion. And the next came is portable TV. And the portable TV was replaced. The portable TV was replaced the radio. And after that, the portable TV had a decade in our life. After that, the larger size of TVs. And after that, the color TVs. And after that, the LED TVs. After that, LCD TVs. And after that, plasma TVs with the remote control and all those things. So that means with the change in the fashion, or with the change in the taste of the customer, or with the attitude, the change in the attitude of the buyers, some products or some goods are completely obsoleted, are completely outdated, are completely pushed out from the market. The reason for those products, the reason for the depreciation to those products is obsolescence. And the next reason, after having the 4 reasons, the next reason is accidents. Due to accidents, the entire product may be collapsed, or the entire asset may be destroyed, or the part of the asset may be destroyed, or some part of the asset may not be in use. So, due to accidents also, the fixed assets may get depreciated. These are the 5 reasons for the causes of depreciation. The first one is wear and tear. The best example for that one is cycle tires and tubes. And the second one is affluction of time. So the best example for that one is leasehold properties. And the third one is depletion. The best example for that one is oil wells, mines, quarries. And the fourth one is obsolescence. So due to the change in the fashion or taste of the customer, some products were completely obsoleted, or some products were completely outdated. And the fifth one is accidents. Due to accidents, some goods or some fixed assets may get depreciated. And after that, we must know what are the factors which influence the amount of depreciation. And it can be expressed or it can be explained under a side heading, factors influencing the amount of depreciation. So the main factors which influence the amount of depreciation are in the calculation of depreciation. The depreciation should be calculated on the fixed assets. How the depreciation will be calculated can be explained while doing the problems. But what is the amount of depreciation will be influenced by some factors. And what are those factors which will be influenced with the amount of depreciation? And the first one is cost of asset, or the purchasing value of the asset, or what is the value of the asset. The second one is estimated scrap value. The other names for scrap value is residual value, or paid up value, And the scrap value, instead of scrap value, we can make use of surrender value or paid up value or residual value. At the end of the life period of the asset may not have any value. And that is called as scrap value or residual value or paid up value or surrender value. And the next one is estimated useful life or estimated working life of the asset. The working life of the asset may be 10 years or 5 years. After 5 years, it may be considered as a scrap, or the residue, you can get a residual value, or you can get a surrender value. And these are the three factors which will influence in the calculation of depreciation or the amount of depreciation. The first one is the cost of the asset or the value of the asset. And the second one is estimated scrap value or surrender value or paid up value or residual value. And the third one is estimated useful lifetime or estimated working life of the asset. And in the calculation of depreciation can be done in so many methods. The first one is fixed installment method, and the second one is a diminishing balance method, and the third one is sinking fund method, and the fourth one is annuity method, and the fifth one is depreciation fund or provision method, and the next one is machine hour rate method. And these are number of methods or various methods are there in the calculation of depreciation. As far as our intermediate syllabus is concerned, we must be thorough with the first two methods. And those two methods are straight line method, and the second one is diminishing balance method. Straight line method or the other names for straight line method: fixed installment method, original cost method, and on cost method also can be used. These are, for the fixed installment method, there are other names: online, original cost method or straight line method. In this method, for an entire year, the depreciation amount is a fixed one. That means if the depreciation was calculated for the first 12 months, for the next 12 months also, the same amount will be shown as the depreciation amount. That means years together, the depreciation will be unchanged. This is the main feature of straight line method. Under straight line method or under fixed installment method or under original cost method, the depreciation amount for entire year will be a fixed one and it will not be changed. And the second one is diminishing balance method. The other names for diminishing balance method: reducing balance method or reducing installment method or written down value method. You can make use of any one of these words instead of diminishing balance method. In this method, depreciation will be calculated at a certain percentage each year on the balance of the asset, which is brought forward from the previous year. For example, in the first year, if you have purchased an asset, if a machinery was purchased for 10,000 rupees, the journal entry for that one is machinery account data to cash account. And we are going to prepare the asset account. Here the asset is machinery, and you have to prepare the machinery account. The heading will be, the title of the account is machinery account, and that the journal entry will be posted on debit side as to cash account. To cash account 10,000 rupees. This is the opening balance. On that opening balance, you have to calculate the required percentage or the given percentage in the problem. Suppose they have asked you to calculate the rate of 10%. For the entire year, on 10%, the depreciation will be 10,000 into 10 by 100, and it comes to 1,000 rupees. And for the depreciation, the journal entry will be depreciation account debtor to asset account. Here the asset is machinery. So depreciation account debtor to machinery account. In the machinery account, it will be shown on credit side as by machinery account. By machinery account 1,000 rupees. And the debit total is 10,000 rupees and the credit total is 1,000 rupees. The difference will be the balance carried down. And the balance will be carried down is 9,000 rupees. In the next year, it will be brought forward as 9,000 rupees. And in the next year, on 9,000, at the rate of 10%, you have to calculate the depreciation. This is the basic feature under diminishing balance method. For that, we are saying that depreciation will be calculated at a certain percentage each year on the balance of the asset, which is brought forward from the previous year. So, what is the opening balance? On the opening balance of every year, the depreciation will be calculated under diminishing balance method. So, under straight line method, the depreciation for the entire year will be a fixed one. For the entire year, keep in your mind, because while doing the problems, in one of the problems, we may calculate for 6 months in the first year, or we may calculate for 3 months in the first year. For that reason, I am saying, you must be keep in your mind that under the straight line method, for the entire year, that means for 12 months, the depreciation will be a fixed one. So under straight line method, for every year, the depreciation amount to the total year is a fixed one, will be the same, will be unchanged. Under the diminishing balance method, every year on the opening balance of the every year, the depreciation will be calculated. Every year, the depreciation will be calculated as the given percentage in the problem on the opening balance. So, every year the opening balance may be changed. For that, the depreciation will also be changed. Or for the first year, if the first year the depreciation is 1,000 and in the second year it may be 9,000. And for the third year, it may be 800 rupees only. That means the depreciation will be gradually reduces, or it will be written down. Hence, the second method may be called as diminishing balance method, reducing balance method, or reducing installment method, or written down value method. Under this method, on every year opening balance, the required percentage of depreciation will be calculated year by year. The depreciation will be decreased under the diminishing balance method. Under the straight line method, the depreciation which will be a fixed one for the entire year. After having this, we can go for the problems, or we can have the problems, or we can have the illustrations.